Hey guys, welcome to Stock Talk with Mike. I want to talk to you about another company that just recently went public through the traditional IPO route or initial public offering, so it wasn't a SPAC. And they just came public, I think, a week or two ago now. And they're an international e-commerce play that's growing like crazy. And that company is Coupang, ticker CPNG. Coupang was founded by their current CEO, Bom Kim, who was a Harvard dropout who started Coupang back in 2010. It's actually a SoftBank-backed company. Bill Ackman was also an early investor in Coupang. So it is quite an interesting play. As I mentioned, they're in the e-commerce space, and they really execute at a really high level as far as their e-commerce. On that side of things, you could argue maybe even better than Amazon as far as quality of their service that they offer their customers. They offer a rocket delivery where basically almost all their packages are delivered within 24 hours. So 99.6% of packages are delivered within 24 hours. They also have dawn delivery where you get your pack. If you buy your product before midnight, you'll have it before 7 a.m. the next day. They have a very similar setup where you can be basically a member similar to the Amazon Prime, where you get better deals on and free shipping on product. They also have some interesting components from a delivery perspective. They're completely vertically integrated, so their employees also even do the delivering of the products. And they're more than just like regular consumer goods. They're also a little bit of like Instacart or DoorDash, delivering groceries to your door. And they also have almost zero packaging. So over 75% of their deliveries use no cardboard boxes at all. They have these cool reusable bags that they drop off at your door that they pick up and take again. And even returns, you don't need any labels or anything. You just sit it outside your door. So really customer centric, really executing on a high level as far as the e-commerce side of things. I think one really interesting thing just logistically about Korea, even though it's not a massive country, right? So geographically it's pretty small, but they have close to 60 million people, so decent size, is that they have fulfillment centers close to most of their customers. So over 70% of South Koreans live within 7 miles of a Coupang fulfillment center. And that's what allows them to be so efficient with their delivery process. And they also have a lot of those other businesses that a lot of these other e-commerce giants are getting into as well, right? They have Coupang Play, which is a streaming service. They have Coupang Pay, so digital payments, and a bunch of other businesses baked right into them as well. Looking at some financials for Coupang, as always, I think the number one first thing you want to look at when looking at a new company is the market cap. It can really tell you a lot about a company and also help you visualize the growth opportunity ahead as far as where it could be trading or what the market cap could be in the future. Can really give you a better sense of the growth opportunity ahead. So their market cap is currently $77 billion with where they're trading at currently today. And I've also in blue here put a comparison with another e-commerce company that I'm really bullish on, and I've been an investor in for quite some time, and that is C Limited, ticker SE. So it has $112 billion market cap. They're serving Southeast Asia. They're based out of Singapore. And of course, Coupang, as I mentioned, is strictly, for the time being, only serving South Korea. So price to sales for Coupang, it trades at just about 6 times sales currently. So not too bad for one of these high growth e-commerce plays, whereas C Limited trades at 25 times sales, quite a bit more expensive there. And also Coupang's much closer to profitability at this point with better margins. Their profit margin is negative 4% currently, where C Limited, after their last report, they're at about a minus 37% profit margin right now. So that actually looks half decent for Coupang. I think some of the bigger knocks are about their share of the market and the growth opportunity ahead in Korea, which I'm going to talk about a little bit as well. Revenue growth for Coupang. So last year they reported 91% revenue growth. So huge growth. Like a lot of e-commerce plays, that growth was accelerated by the pandemic. In 2019, they saw 55% revenue growth. And I compare again to a company like C Limited, which we've seen just have a meteoric rise, that revenue growth was up 101% in 2020. So actually fairly similar to what we're seeing here in Coupang. But it does trade at quite a bit cheaper valuation and closer to profitability as well. So quite an interesting play. One thing about Coupang though, I wish, like, we're already talking about $12 billion in revenue currently, whereas in 2018 that was $4 billion. So I would have loved to see Coupang come public a year or two ago and get in much, much earlier. I do feel like a lot of that growth and market expansion has already happened. So, that makes it probably a safer play now. It doesn't have a lot of those early, challenges and risks that a lot of companies have. So it's safer from that point, but definitely it's had some of its probably bigger exponential growth already behind it. For instance, C Limited, which I'm comparing it to here, has been public for a couple years and has had phenomenal returns and growth, but is still only $4 billion in annual revenue. So we're talking about a company here in Coupang that has basically triple the revenue already, and it's just coming public, than a company like C Limited. So Coupang already has a lot of the market share for e-commerce in South Korea. They're the largest e-commerce player. Their closest competitor is actually a subsidiary of eBay, but their CEO, Bom Kim, thinks there's actually still a lot of opportunity for them. So that's one thing to keep an eye on, given that they already have quite large revenues. Will they be able to still continue to grow at a pretty fast clip? In a recent interview here, he was asked, Bom Kim, their CEO, was asked about the market opportunity in South Korea and about expanding beyond. And he said, if you look at the size of the Korea market, the commerce market, so he's talking all commerce, is just over 540 billion. Just in the next 3 years, Kim said, when he was asked about the expansion outside South Korea, it's a huge opportunity. We believe we're just 3 to 4% of the commerce market last year, which is such a small percentage. We're just scratching the surface. So to me, that means that they think there's still a lot of opportunity to not only increase their market share within e-commerce, which I'm going to get into is also a pretty big industry in South Korea, but also just continue to disrupt regular commerce and take on more purchases online in Korea. And I imagine if that growth starts to slow, they'll look at more international expansion opportunities, potentially to Southeast Asia, Thailand, where they could, for example, where they could be a competitor with C Limited, for example. But looking at the e-commerce opportunity in South Korea and doing some back of the envelope math, I think it's actually a pretty interesting story here. And I think there's still a lot of runway ahead, and that growth story isn't over. So I think that's a knock you see, is that people are concerned that they already have such a large part of the market share. But I think of a company like Amazon, where in North America, they have almost 50% of e-commerce. And Coupang's only at about 24%. So if they continue to grow that market share to 50%, which I think they can do with how customer centric they are, that alone is going to really help still drive their growth. And e-commerce is growing incredibly quickly in South Korea as well. In 2020, it grew 22% to $90 billion. And it's expected to grow to annual CAGR, so compound annual growth rate of 12% moving forward. So by 2024, the e-commerce industry is expected to be $142 billion in South Korea. So if it's currently 90, up to 142 billion, currently they're doing $12 billion in revenue. And I'm thinking, that market's going to go up to that big. If they can get up to 50% market share over the next few years, and you see this growing to maybe a $200 billion industry in South Korea, wow, you can start to see how this company could easily 5x its revenue still in the next 3 to 5 years. And you're looking at a $350 billion plus company, and even much larger than that in years to come. So I think there's still a lot of runway ahead as far as market saturation. So I'm not too worried about that. but I do expect revenues to slow, sort of like we saw with Amazon, but it's still continue to grow to maybe about a 40% clip as it's become more saturated, and then is expanding out other services like AWS. And I don't even think I mentioned that, but Coupang also has a cloud services as well. So obviously they're expanding into other industries, and we can see huge growth in their streaming side of things as well. There's a lot of the story that still needs to be told here with Coupang, and see how they handle themselves as a publicly traded company, for example. So the Coupang IPO was priced ultimately at $35 a share, and it shot up to well over $60 a share. I think it was up 80 some odd percent almost immediately, and then actually sold off pretty quickly. Obviously, we've had a lot of market turmoil in these type of names. Any kind of growth story or tech stock, just definitely has been selling off pretty hard. And there was an announcement that they had approval to go ahead with early lockup expiration of 34 million shares, which I believe expired on the 18th. And interestingly, on the 18th, Coupang traded very flat. It might even been slightly up on the day, or at least very flat. So that was good to see. That didn't put any real downward pressure on the stock. There is still additional shares that will stay true to the traditional lockup period of 180 days from the IPO. So basically 6 months out from now, employees, etc., want to sell those shares. But honestly, I actually like that early release, and I've seen that with other companies lately, like Unity Software as well. I think that can act like a little bit of a pressure release valve, taking pressure off that lockup expiration day when it comes up later on. But that's a long ways out. And we are trading well off the highs now, here at about, close to $45 a share. And I actually did purchase a small position last week in the low 40s here. I'm hoping I'll have a chance to buy a bunch more, potentially even lower if we see continued sell-off in these type of names. So I could see Coupang becoming a decent sized position in my basket of e-commerce plays. E-commerce stocks have just been so good to me, and not that they're all created equal, but I like the international exposure that can come with these plays. And it's obviously a business model that works. So I hold shares in Amazon. I've been a long-term shareholder of Amazon. It's been incredibly good to me, and now is a real stable stock in my portfolio, really, during a time of sort of some chaos in the markets. And I also own C Limited, which I mentioned, the Southeast Asia, Singapore e-commerce play. I own Jumia, which is the Africa e-commerce play, which is much more speculative, trying to find their way as far as profitability and revenue growth. And I have a small position now in Coupang as well. I actually recently sold out of my position in Alibaba. I've been a long-term shareholder in Alibaba. I was patient through the Chinese antitrust probes into Ant Financial, but the recent announcement of the fact that China has asked Alibaba to divest their media assets was kind of the icing on the cake for me. I'm like, I want to be investing in innovative, disruptive companies that are growing and moving into new industries, and that stifling growth is just, just doesn't really fit my investing thesis. So even though they trade cheap, good valuation, I still think it's actually decent here, just because it trades so cheap. I just, for the long term, wanted to put money to work elsewhere. And I'd rather hold Coupang, for example, moving forward, as a bit of a more intriguing play, I think, for the future right now. And then what else? I guess I got Shopify, which is also a play on more individual company online commerce. And then recently, another more, I guess it's more of a speculative play. It would be RAAC, ticker RAAC. It's a SPAC for Berkshire Grey, which is an AI play on basically automating fulfillment centers. So using these AI machines to pick orders and to fulfill orders. And it's a really interesting play. They got some huge customers like Walmart and Target and FedEx even. So I think they're projecting some massive revenue growth. So that's an interesting play on e-commerce, I think, as well. It is a SPAC, and SPACs have been hit hard. It's trading very close to the $10 SPAC price, so I think there's very low risk in it right now. But that's an interesting play that I recently picked up too. So again, Coupang I think is just an interesting part potentially of my e-commerce basket, and I think it's just a trend that it just makes sense to have some exposure to the space as just regular retail and big box stores continue to get disrupted by e-commerce. So that's what all I have for you today. So thank you so much for watching, and as always, happy investing.